Good afternoon, everyone. How are you? Or good morning, or good evening, or good night, wherever you are in the world. Welcome to the proptrade.com. Today's our live market analysis of the key data of the day, which is coming up in about 5 minutes' time. The core retail sales, you can see that on the calendar there. Lots of red peppered throughout the calendar this week. PMIs later on. We've got some pending home sales later on today, PMIs later on in the week. Trump with another scheduled speech just as we're about to go live as well. Let me just check what that says. Due to speak in a phone interview conducted by CNBC. So I'll try and, if you've got CNBC either on your TV, sorry, I've moved my camera today. It's normally up there. It's down here. If you got CNBC on your TV, try and scroll it. I'll see if I can find it. I'm not sure it's on YouTube, but see what he's got to say today. Obviously, has there been any interesting market volume? That's probably what the market's really looking at before he says something to CNBC. Obviously, markets are really still hung up on the Strait of Hormuz. Hands up, guys. Who had heard of the Strait of Hormuz more than 2 months ago? Obviously, I had. Obviously, I'm a geographer by training as well, so it was a key area we talked about when we're looking at natural source depletion back in the 80s when climate change first came to my attention. But anyway, it's a long time ago now. Yeah, so that's very much on the cards. Obviously, we had that detention of Iranian cargo ship yesterday. Rumors yesterday that Vance was on his way to Islamabad in Pakistan, the capital of Pakistan. Pakistanis doing very well here, hosting and being the go-between between the US and the Iranians. However, it doesn't look like that it's going to happen today. See what Trump's got to say with this call at CNBC in 5 minutes' time. So let's see what the numbers look like and what Trump's got to say, because that's really what's driving markets. I hope you can see that. You can see this morning we had a bit worse than expected earnings. Sorry, not earnings, but the unemployment count ticked up to 26.8, nearly 27,000 here in the UK from 17,000 last month. Quite a big beat from the 22.6 was expected, and that was a down. The previous month, you can see there, 17.1, was a downgrade from the previous month at 24.7. So this might be, get downgraded as well. Earnings continue to hold up better than expected, but not as good as last time, over 4.1%. I've been saying this for a while in the UK. Those with jobs, especially those with bonuses, earnings now over 4%, 4.1% from 3.8% from last month. 3.8% was what's come in this morning. 3.6% was expected. So let's have a look how it's not really impacted sterling or the FTSE much. With the stocks this morning are ahead of the game. I haven't actually got my where is it? There we are. It's on a different slide. It's on a different screen. Got too many screens going on at the moment. There we are. We just bring that down. We've been playing. I've got a different screen I'm projecting on. So hopefully this might be a better. I've upgraded to a 4K screen. So see if this is any better. FTSE 10,582. This is the 2-minute chart, which is what I trade on. Not certainly the FTSE, but this morning we were better. Here, this is the 7 o'clock candle as the data came out this morning. We'd moved higher, but we've reversed quite significantly here in the last hour or two on the FTSE. Sterling, on the other hand, if we look at GB, crosses sterling against the dollar, 135.20, still holding that key 135 level. We've been into it this morning. The data took us lower this morning. Well, initially we ticked high, but then we moved lower as dollar picked up. Now dollar's weakened a tad in the last couple of hours and sterling's picked back up. We're back at 135.20. Obviously, big political storms here in the UK with Starmer denying the civil servants had not told him about Mandelson's missing of his or denial of his vetting, but he came with a very, very dodgy track record, didn't he, old Peter Mandelson? Anybody knows anything about UK politics, but Starmer, the forensic lawyer that he is, claiming that he didn't know. He was told it was okay, and he didn't ask the key question: has he passed vetting? He was told he had, and that's his defence, leader of the country. So, anyway, understandably coming under quite considerable criticism for that, particularly against the opposition parties, and particularly we're weeks away from a major test of UK political opinion, with lots and lots of local councils and the devolved parliaments in Wales and Scotland also returning new MPs and members of the synod within a few weeks. So a big test of UK political opinion, and Labour, Keir Starmer's party, slipping or lagging quite significantly in the polls to the Greens on the left, and the Reform Party, the Reform Company, I should say, on the right-hand side, and the Liberals and the Conservatives getting squeezed in between. Anyway, enough about local politics in the UK. It certainly is enough for many people. Let's just go back to the calendar. We got 20 seconds before the retail sales trips through, and we'll see how we tick. So dollar's been stronger this morning. It's weakened a tad. Gold's bounced off its 200-hour moving average. Crypto has held its gains over 75,000 and holding 76,000 this morning. So let's just leave the calendar on, see how retail sales comes in. Remember, this data's delayed. That's what the little star here is. So I think it's only 5 days late. Yeah, 5 days late, due to the latest US government shutdown, which has now been resolved. So better would be good call, 1.9%. The core, the key core number, so from 0.5%, 0.5 of 1% last month to 1.9%, nearly 4 times better than last month, and 0.5% better than expected. Both the headline at 1.7% and the key core details, which strips out more seasonal items. So the core is really quite strong at 1.9%. So we look at the that compared to there's the data that's just dropped, variable 1.9%, best in a long while, best since February 2023. So nearly 3 years to the upside. So it's a really strong retail sales number. I wonder there's maybe some details in there, but that's a strong suggestion of retail sales. Impact of the tariffs, who knows? The spring Easter spending has been caught with that, but that's a strong retail number. That's exactly the sort of thing the administration in the White House would what we wanted to have a look at. Let me just make myself smaller. Let's just sit on the chat box as well. Obviously, anyone else to look at anything, let me know. This is sterling. Let's just go back to against the dollar. Let's use this as on our 5 minutes how it's how dollar has reacted to that. Sort of dollars picked up sterling here, and it's this is the 5 minute time frame. This is remember the big thick line is the 200 period on whatever time frame we're looking at. We ran into it. What about gold? Somebody's asked. Certainly, Jim Short. Let's go and have a look at gold. Gold, to say this morning, had been into its 200-hour moving average. Just to see how gold's reacted. It's reacting obviously not as you might have expected during the war, but a lot of that is in anticipation of central banks having to liquidate some of their holdings. So 4778. So dollar ticked up certainly on the that strong retail sales number. So a big old flash down. So be careful if you're short. Jim Short, well done. Well, you call it Jim Short, presumably you're short. I don't know, but certainly here from my this little 5 minute. I don't really trade this strategy with gold, but it's certainly been successful this morning. That last trade was long here. Tick cross there. We've moved up, ran into a key resistance. 4795 is our key resistance this morning. See that? This might only be 5 minute time frame, but that's suggesting the sellers here for half an hour or so there, right there at 4795. The strategy, having touched the outside of the Bollinger Band initially here at 1220, eventually crossed here crossed there at 1305, and then you got short a confirmation here. So that would have been your entry here for using this mean reverting strategy. Let's put that as green for the entry. You can see that our stop loss would have been just above these bodied candles. So the real stop loss should really be there. Just bear with me a second. Sorry, my camera's here and I'm looking up here because I've got my chart. So stop loss roundabout, sort of not the right top of that wick, but split the difference between the two majors. So very much in the money. I may have actually taken some money off there ahead of the date, to be honest, because that was such a strong candle, given that we were coming into this low. But it would have certainly have hidden. It would certainly have hit target one, which would have been the because we were so close. Might have taken some off there. Let's be honest. If this had triggered here, and that would got a big old candle before the main news of the day was going, I would have taken off 50% of my risk at that point, given the size of the candle. Okay, simply ignore that we've bounced back, but just simply because we're trading the 5 minute time frame. It's more than 1-to-1 of our risk reward. So our stop loss is up there. My stop loss would now be rammed back down to entry, so I can't lose on the second half. And then I would, on the spike of the news, as we'd hit the outside, I would have taken, how we trade this, those of you that follow me here, we would have taken another 30% off on that. So 80% is now closed. My stop loss is here, and we still got 20% live. So 20% is not losing, but it's giving back a lot of the gains. Obviously, I wouldn't have caught this move. This is still moving lower. Your position was 4790. So you were short, were you, my friend? Nice one if you caught it or you've caught the bottom. Obviously, again, I don't know what it's all about your time frame, Jim Short. My take profit was 4768. So if you hit that for nice one, well done, my friend. Congratulations. Good trade of the day. Don't give it all back. Right, just excuse me a minute. I just need to pop out around the office. The bell's just gone off. I know you can't hear it, but got a delivery, and I also need to go and grab my cup of coffee. Okay, I'll be back in a minute. Boom. Right, back. Right, sorry about that. But nice one. 1 minute. Okay. So that's a nice old win. 22 points, $22. Don't give it back, my friends. You can see it bouncing back now. Don't get let's have a look at the 1 minute time frame. The 1 minute time frame using this strategy. I don't know how you approach it, mate, my friend. This would have suggested a long there, which hasn't worked out. Then it's gone short, and then there's a nice gap, another spike there on the news. So that's gone long there. You see that we've got touch the outside of the Bollinger Band. The first one has failed, so we've been moving down here. This is about the risk of trading the short term, but even my 5 minute strategy is in danger of getting stopped out, as you can see that. So we've had a initial reaction on the headline, which is much better than expected. So dollar improves quite significantly. What happens? We reverse virtually straight away. 0.20 lots, very good. So money in the bank. As I say, don't risk taking it back. But if you're trading on 1 minute time frame, you just got to forget about that one. If you're trading this strategy, it's triggered again there. It's touched the outside of the Bollinger Band. But we haven't had a cross of the stochastics. That system has not then gone short. Okay. But you saw with my 5 minute time frame, this is how I tend to stay with the 5 minute time frame. 2 minutes occasionally. I like 2 minutes on the indexes, and I say I don't really do it with gold, but it's applicable to all assets. You work out what works for you, my friends. That's what it's all about. So the 2 minute time frame looks like it would have done the same thing. We would have got short earlier. And this has already gone long, you see. So that would have closed out my short position. Sorry, let's go back to my 5 minute time. Get my explanation clean. So that's my short. There's my second. And here, because we got so close and we're stuck, I'm going to see how this finishes. If this closes above the 20 period into the upper half of the Bollinger Band, I'll probably close it anyway, because we've got a virtual. We haven't had a touch yet. We're starting to move down, but you can see we've sort of flattened out. So it's all about trading what you see. So I'm waiting till the candle, as I said say all the time, but remember, candles by their nature are fractal, so we've got to wait for the time frame to close. And you see here, if I'd reacted as this moved up to my stop, close to my stop loss, and closed it out, I mean, obviously it still isn't finished yet, and we're only we're at 30. This is the 38, so we've still got 2 minutes to go. It's 38, and this is the 35 candles. So we were short here, 50% off here, 30% off. So we got still got 20% risk of my position. Obviously, Jim Short, I'm guessing you closed all of yours, the whole position when you hit the target. So it was entry, stop loss, target. Tell me you did have a stop loss, Jim Short, my friend. Please tell me you had a stop loss on this trade, because obviously the risk of trading the news is it could have been the other way around, and it could have been really bad, and we could have reacted the other way before we reacted back in the faded the move. As you can see that very much in the one. If we go down the 1 minute time frame again, you can see what's happened. We've had there's the data that's come out. It's much better than expected. So we spiked all the way down there. That is still an area to put a little mark on, even if it's intraday. 4766 we went down to, and since the data, we've reacted all the way back to nearly back to our 5 minute entry, but then we've come back short. So it's looking here, certainly we've gone back short again, and then again this one. So that one there, my friend, has just triggered short on that candle there. So this one on the 1 minute time frame, it touched the outside of the Bollinger Band. That's what we're looking for. It's the stochastic. Sorry, I keep looking up here because that's where my big screen is. I need to look at the camera. That's where the crosses occurred. See the crosses there? It's nice and clean on that one. So we've gone short here. It's already under our target one. So that one here on the 1 minute would have gone short a minute ago, literally. So that one's still in. Remember, our 5 minute is still short, but the 1 minute guy's been in and out, and now he's short again. The trader, the 1 minute trader, the 1 minute trader is I just put in, has gone short again there. So let's change the color on that one. Make it a black line. So you can see the black line there. So the 1 minute trader has gone short of that black line with his first target down here. Let's change that to thick line. Sorry, let's make it so you can see the black line there. That's the entry on the for the 1 minute trader, and the 1 minute trader's initial target is the outside of the Bollinger Band. And the stop loss, like with all good systems, should be up at the top of the Bollinger Band there, where the turn in the market's taking place. You can see as a 1 minute trader. I'm not suggesting Jim Short that you go short again. Protect what you have. Follow your system. Don't listen to people telling you what to do. But if this system you find works for you, fine. I say I don't use it down here at the 1 minute. 2 minute is probably the lowest I use to actually put risk in the market. I might watch the 1 minute and trade the 5 minute. But as we know, what we said before, didn't we? This system here on the 5 minute would still be short. So my stop loss, remember, is down there now. I'm going to pull it down, trapping in guaranteed. So the 2 minute, sorry, the 20% that's left live can't lose again. So it's going to win at least that, even if we get reversed to the red line there. But we're down again towards the bottom of the Bollinger Band, towards target one. This blue line here where we took off. We go back to the 1 minute time frame. Remember, we got in here and our target was here, and our stop loss is all the way up there because that's the turn. You see the very poor risk reward. That's our initial target, and that's our stop loss. So do we want to pull our stop loss down a bit? Well, we didn't get in till here, did we? So we might not want to give too much away. So let's pull it down and put it where our stop loss is on our 5 minute, which also happens to be the 200 period. See this blue line here, the 200 period 1 minute chart, which we're under. So we're giving some of that back now. But we're only giving that bit back now. Let's see what happens. But we're out of the money. Remember, we got on this black line here. Okay, Jim Short, my friend. I hope you're still with us. You did have a stop loss. Very good. Stop loss 798. Bravo, my friend. On to the next one. So gold. So it's just got. If I just go back to the higher time frame on gold, gold's been weak all during the Asian session and the European session. So Asian session, we came into the 200 period hourly moving average and then bounced off it a wee bit as Europe side buying, but then we've come back down under it here the 1 hour, but we can't make the decision if that's going to happen until this candle is completed in 15 minutes. This is the 1 o'clock candle that completes at 2. So there's a big negative engulfing candle at the moment. So we could be biased to the downside again, and we could, the hourly Bollinger Band low sits at 4768. However, the stochastics are still moving to the upsides, but this is one of the major news items of the day. And again, of course, things could have moved because of if what Trump is saying at that CNBC interview, which I can't find. Let me just see if I can find what he's got to say. CNBC, so is any news flow from Mr. Trump. Oh, of course, Kevin Walsh has got these hearings as well too. I forgot about that. That's kicking off shortly as well. That's interesting. That's kicking off as we speak. So, Senate Banking Committee, 10 o'clock New York time. The would-be chair, the nominee, Kevin Walsh, sitting there. So, obviously, CNBC keeping that close to their chest. The comments from the president, but I'll update you that if anything comes across my terminal here. Let me just bring in some. Obviously, the main news has been that retail sales been much better than expected. Nothing yet. Perhaps he hasn't turned up yet, which is his want, isn't it? Keep calm and carry on. That seems to be the movement, doesn't it? So anyway, so gold had been weak in the Asian session, had recovered a tad in the European session as we come to the US Open, some 45 minutes away. We are down at the moment. So again, if you want to trade the Fibonacci level, which is what we had on our little screen saver for today. So there we go. We've got as high as the key. No, I think I was doing that on purpose, wouldn't you? But it didn't. We stopped. We stopped at the first key fib level, the 38.2 this morning. Here at 4794. I think you said that's where your stop loss is up there. 4798, didn't you? My friend. So Jim Short. So well done. And you got that nice move lower. So well done. So the low of this morning took us to 4772. And that was around about the London Open here on the 8 o'clock candle, 8 till 9 candle. So pre-open, we were short. We recovered, but not recovered much. We recovered from the low of 4772. We got to 4794. Some $20, and then we've given up a lot of it back, but we're right smack bang now on a big support area as well, the 200-hour moving average, but we're currently under it to the downside on gold. So let's have a look at some of the other assets that we have a look at on a daily basis. So Bitcoin holding that key $75,000 level here again. Remember, we changed we fiddled with our we moved our trend line yesterday. We'd broken it and moved lower, so we back up yesterday. So good Friday, very good Friday, in fact, wasn't it? At the 17th, we took us higher, but down we went Saturday, Sunday. Bounced yesterday back over 75,000, and we're currently at 75,820. So our high over the last few days has took us to 78,000 on Friday on Bitcoin. That's obviously the next upside target, 77. 300 was the close on Friday's daily candle, but it was the most positive candle for quite a while, wasn't it? It's similar sort of moves, nothing outstanding. Again, if we scroll back in our channel, the biggest candles are the negative ones. So we have broken out the top of the candle. We've done that before, though, haven't we? But this is the first time with any significance. The first time we felt it for 1, 2, 3, 4 or 5 days. So this is looking relatively positive now as the risk on vibe goes. Obviously, the caveat here on the daily time frame is that the stochastics have already moved back down from an overbought area under 70 and starting to track lower. But will this trend line hold? That one has already broken, so that's a bit negative. Big support, the key support is the 20-day moving average at 72,250. That's the key support on Bitcoin on a daily basis. So big positive day yesterday, engulfing Sunday's action, but down, cooled a bit so far today. Any other comments from anybody? No. Okay. The key asset remains the commodity markets, and the most important at all remains the oil market. So Brent at 95.88 at the moment, and WTI at 89.82. So the differential between the two derivatives is back in play. But as you can see, Brent here still under $100. So relatively positive the last week or so. Obviously, we got a bit carried away on Friday, we went to $87. Again, down again yesterday. So the positive vibes continue, and we're at 96 at the moment. So a breach under 90, back into 85 and $80 before it all kicked off. Or at the first day after it kicked off, we went to $80. On the Friday, the 27th, or Thursday the 27th, Brent was trading at $73 a barrel, and obviously we've been as high as 120. The key Strait of Hormuz remains very much in play. Americans saying yesterday 14 tankers turned back. But no missiles being flown at the moment, and still chatter or potential positive chatter of the Iranians wanted to do a deal. Or the Iranians saying they're not in Islamabad, not going to Islamabad. Vice President Vance isn't there, so we shall see how it all pans out and if the talk continues. But we remain on tender hooks from data coming out of the United States, and particularly, obviously, any social media posts from the president in particular. Markets swinging around all over the place, but seems to be, like we saw last week, seems to be looking through the war somewhat. So we've, just look at this oil market. We've had now 1, 2, 3, 4, 5, 6 consecutive days under $100 for Brent, and the bounce through it since the big announcement of the ceasefire 2 weeks ago was a 1-day bounce through it, and then we came back down. So still Trump saying there won't be an extension of the ceasefire, and he's still talking about blowing up bridges and other infrastructure in Iran if they don't agree to his terms, they come to his table. The Iranians still continue to play hardball. Their infrastructure seems somewhat devastated. If you believe everything the Americans are telling us, the Army, the Navy, but there's still some little buzz ships, wasn't there, in the Strait of Hormuz. There's the issue remaining: where are those mines, especially the ones that aren't connected or haven't got detectors on, that are just flowing around in the ocean current? It's going to take a long time and a lot of skilled work to get rid of all those mines there. So inevitable, looks like there will be some sort of accidents, even when the strait is opened, and even if it happened tomorrow, it's going to take months for the oil market to get back to some sort of equilibrium, and all those massive tankers get put back in their place. And bear in mind the people involved on the tankers, obviously, and the citizens of Israel, the citizens of Iran, and indeed the citizens of America caught up in this. So anyway, keep your eyes on what's going on in Washington. It has an impact on all of us. $96 a barrel Brent is currently trading, and WTI at just under $90. I say the dollar was a bit firmer this morning. Let's just go through them in order here. I should start with the euro. 17.56. So dollar a weekday yesterday, but firmer today. So we had another go at towards the 118 zone on into close yesterday. That was a positive day for the euro, but we've come back today. So that was sorry, yesterday's rally over 118 didn't hold for very long, and again we descended during the latter half of the US session yesterday. We've recovered a bit this morning, but then we've come back, so we've given away half of our gains today already. So the 200-hour moving average playing a support level where we are now. So 1760, a bit of a support area for the euro. Breach of that, and we're back into that key ones. Or it's now beginning to be a key level. 117.30 when Trump was remarkably, how this is played out when he first started speaking back in Davos in January. So euro it's finding support potentially here. So we've tested it for 1, 2, 3, 4 hours now. Main data's out, lifting the dollar. Will it continue? See what the president has got to say, because I say there's still some interesting news later on today. Anything Chair Walsh, designate Chair Walsh has to say, and then pending home sales in an hour's time. So obviously perhaps Trump hasn't had anything too radical to say to CNBC, or it's been delayed, or we shall see. Obviously what happens, but dollar's stronger on that. Look at the dollar yen, similar pattern. Dollar was down in early European trades, and we've bounced back up again playing off its 200-hour moving average. Dollar CAD 136.50. Under its hourly, it is the hourly, under its hourly 200-hour. So dollar very much on the front foot against the dollar weakening against the CAD, I should say. That's the hourly trade. So it continues to the daily time frame for dollar CAD continues to move down. Dollar holding up, loonie holding up. So we're betwixt 136 and 136. 137 and 136 at 136.50. Key support area, or had been, and we're sort of tranking down. So here you can see clearly the daily trend line and daily down movement is still in place. Loonie coming back from the weakness at the second half of March. So we're back under 137, but not quite back to 136 yet. And if I zoom that in a bit, you can see the zone we'd been in during January and early part of March. The end of January and the early part of March during the war, and then we rallied within sight of 140 before we've come back down. So it's been quite a roller coaster ride for the loonie in particular. 136.50 CAD. Aussie still very much in demand. 71.60 at the moment. We said on Friday we had gone over 70.72. Big opening weakness to start off yesterday, but it ended up a very positive Aussie day as a dollar weakened yesterday, and dollar, as I say, like we saw with the others, coming back a little bit today, but still, do the hourly. Nothing compared to the the big upward rally we got. So these are 200-hour. You can see it's been really, really well supported to the upside, and 71.60. Bit of weakness today. Need to get back over that 71.70 if we're going to move back to the high of the day at 71.85 on the Aussie. But it's looking like it buys the downside. But the horizontalness of the Bollinger Bands and the 20 period moving average remains relatively benign. It's a sideways action. Kiwi, similar movement. We're back to it. The key .59 level having moved up significantly yesterday. That's weaker dollar we saw yesterday against all its crosses, even the Kiwi here Big positive day again today for the Kiwi, and we've managed to recover .59, but we cannot break away from that zone too much. We've had a high of 59.18 this morning, similar to yesterday's high, and similar to the opening salvos from last week as well. So 59 key area, and we're holding it for the Kiwi. Sterling we saw earlier 135 is big old significant level to be above. We had breached it briefly yesterday. On Friday, and but came back yesterday. So 136 we can't get to and break. You can see here on the hourly chart, can't get to and break, but we're still holding 135. But that's looking a bit more vulnerable now than it has done in a few days. So dollar back on the front foot against sterling as well. And say, as I said earlier, political machinations, not only in imbibing the US president, but also the Prime Minister of the United Kingdom. So not as big a positive candle yesterday for sterling against the dollar as the other crosses, but we still hold 135. A breach of that could quite quickly take us back down to the 200. This is the 200-day moving average, remember, and the 134 level. So went up very quickly. We could come down quite quickly as well. So watch that as we go forward this week. 135, a breach of that. Significant, but at the moment we're still holding it for sterling. And Swissy, where's the Swissy gone? There we are. Swissy 78, back to 78. In demand. The dollar breached. We got to 80. We couldn't move any higher, could we? At the beginning of April, and we've moved lower since 200-day, 20-day, and down we go into this cluster zone here from pre-war. Really, this is the big uptick there at the on the 2nd of March on the Monday, the Friday. We were down here. We'd closed Friday down at 76.83, so that'll be a target for many. The pre-war low, or the Thursday before the war started. Are we going to give all that dollar gain back up against the in-demand Swiss franc? I'm just seeing some market earnings numbers. General Electric, not the bellwether it used to be, but they're down 3.3% pre-market. And Northrop Grumman, military manufacturer, RTX as well, up 0.6 of 1%, but Grumman down. But GE Aerospace, as they are now, down for the day. Big news on the share front is the stepping down of the CEO. He's going to hold some sort of presidentship or chairman, not chairmanship, or some sort of presidentship. Tim Cook from Apple being replaced by a guy I'd actually never heard of, with all due respect. A guy called Mr. Ternus, John Ternus, take over as CEO. But he is the man behind some key products that Apple have had, the iPad and the iPods. So we shall see how he's taken. It's been received quite positively. He seems to have taken the best of both Cook and Steve Jobs. So we'll see. The shares are actually down 0.7 of 1% pre-market at 271. But I'm a big holder of Apple stocks, so takes over on the 1st of September. Executive chairman role here. It's just running across the Bloomberg here. John Sucuri will take expanded role of chief hardware officer. Johnny Cerrucci, so I should say, excuse me. So anyway, big strong retail sales, weren't there? So anyway, Swiss franc weaker today against the US dollar, but the trend remains very much to the downside. We're trading at 77.90, so it's back to .78. Have we seen the low of this session? I wouldn't hold your breath on that. That where my purple line is there from 77 zone is that far away, and it gets to the cluster here pre-war. So we'll see as we move to the downside. Stock markets, I say, are positive. Let's get rid of had been positive. I think they might have rolled over. Obviously, the US markets cash markets aren't open just yet. In Europe, the FTSE we saw earlier, the DAX 24,460. Big old strong day on Monday. Couldn't decide what it was going to do. On Friday, couldn't decide what it was going to do yesterday. So understandably, an inside day, which isn't great potentially, technically, or pattern-wise. But we'll see. And we're down to the day. Interesting, we opened higher. Looking at a strange pattern. We're still bid though. There's the 20-day moving average here that we've been above since the 1st of April. So it's been a good April for the DAX, but we can't quite get back to 25,000 where we were pre-war. There's our 27th of February handle, as the US markets have all taken out, well, not all of them, but the S&P and the Dow taken out all time, and the NASDAQ taking out all-time high. So DAX still shy of that quite significantly at 24,500, 25,000 key line in the sand, but still bid to the upside. So over in the US, NASDAQ 26,600. Another up day yesterday. You can see the inside bar, not as significant as we saw in the DAX there, but we are at the top end of Friday's range. And again, pushing to new all-time highs here. That NASDAQ, I hadn't noticed that till just now. But new all-time highs again here on the NASDAQ pre-market, 26,656. This is our derivative of the NASDAQ 100. It's not the NASDAQ, the wider NASDAQ, but 26,656. So that is very bid. Our stochastics have flattened out, but they've been flat since we were, flat since last week, Thursday. So are we running out of puff? But the earnings numbers continue to beat expectations. I seem to say this every quarter, don't we? At the moment, I was looking at those that have already reported, and it's another 80% have beat expectations. Some notable misses, obviously, from last week. Wells Fargo was the key one, but most in line. So we'll see. Again, I always say that a lot, don't I? We'll see, but with the trend is very much the upside. And that's an unabated rally, one of the best rallies for a very, very long time from this low of under 23,000. Excuse me, at the end of March, March the 30th, we were under 23,000, and big bounce. Final day of the month and quarter, and we've just haven't looked back since. Breach of the 24, 25, and now 26 is gone, and we're at 26,500 as well. So big old move on the NASDAQ. Anthropic, the new hot stock, NVIDIA. Oh, sorry, Anthropic's not a traded stock, is it? But NVIDIA still remains our biggest company. S&P futures are trading 7161. We're at 7125 here on our derivative market. So they're ahead of us and moving higher. And we're now into our 5th day above the key 7,000 level and new all-time highs on a daily basis. Friday, and we're above yesterday's close again. So we're positive pre-market, and 7,125 has been taken out now. So euphoria, with all the geopolitics going on. Is this mad? Again, only time will tell, but ride the trend. There is a suggestion that we're running out of puff here on our stochastics. These could easily open up again and continue to move north. But the probability is when we're at 97, 97.65, 90, that we go down. But don't try and catch it. Wait for it to turn. But the turn could be quite significant, as the bounce has been really aggressive. That fiscal changed. I mean, the Fed funds futures we haven't actually looked at for a while, but we're still. Is it going to go? Is it going to? I think they will cut rates. Whether they get the 25 basis points cuts by the end of the year, all depends really on the war and obviously the politics of things as well. That's the other thing. There's a lot of pressure coming now on Trump. He's trying to make out he's not impacted by it, but he's got a fairly thin skin, hasn't he? And he's not going to like this. His likability rate down in the low 30%, which is where it is. He's going to want to be pulling some sort of punches and something positive to say. So he's been looking to try and get this wrapped up as quickly as possible. Obviously, the risk is doing it too quickly or doing it quickly full stop. These are not the sort of negotiations to rush, obviously, for long-term peace and stability in the Middle East. Trump might think otherwise. Chatter of offering, billions to Iranians to sign a deal. I mean, God, we'll see what the actual truth is, or will we? Anyway, stocks continue to shake it off. So all-time highs on the S&P and the Nasdaq, and as you saw, the Dow still shy of its all-time high, still shy of that key 50,000 level. So will it play catch-up, or will the industrial stocks continue to lag the technicals of the Nasdaq? So there we are, to the upside. So any more questions, anybody? I'm going to wrap this up now. It's 2:00. Been here nearly an hour. On the phone, hang on a minute. We've just got President is speaking on Squawk Box on CNBC on Iran talks. Think we'll end up with a great deal. So it's more of the same. Blah, blah. US waits on Iran to confirm talks as ceasefire winds down. So obviously, technically, the ceasefire does end Wednesday, which is tomorrow. It's tomorrow in the United States as well, because Tuesday's dawned. The markets are about to open. And I say stocks are higher, yields are ticking up as well. So, and gold, as we saw, let's finish with gold. Let me see if my friend is still here. If anybody new's here, Jim Short has probably disappeared. I can't blame him. So our gold chart, that's the daily. What we were looking at 5 minutes. Let's go back to our trading platform. I can't remember. We left this. We were short on the minute, weren't we? There we go. Minutes gone. Sorry, let's do this. Go back to the minute because we got in here. Our stop loss, we pulled it down to there. So nice one. It's still short. We would have got out here as that's crossed up actually. That's would have taken us out at our entry, ironically, but. Yeah, it's continued to move down. My 5 minutes, probably why I stay with a 5 minute. A 5 minute time frame. Well, we got in here. We went target 1, target 2, and we left 20% on, didn't we? Our stop loss would pull down there. So this is very much in the money. And now I'm going to pull my. So this is still live. That my final. I'm going to get rid of that 1 minute one. Whilst we've been talking. So this is our 20% is still live, my friends. And pull my stop loss right down there to wrap that in. So that's been a successful short 5 minute trading with the gold market. In fact, we've gone short. It crossed here. So I might have considered, sorry, we obviously used when we're trending, still moving lower. So let me just move that down. So that was our entry was there, wasn't it, on this? So we'd move, there's target 1, the first purple line. There's target 2 as the news broke. We then pulled our stop loss down, which was up here to our entry. We then pulled it down when I left you. We went off looking at the other charts to this level here, didn't we? So, sorry, we pulled it to there just to recoup where we were. After this up, we pulled it to here as we left, and we'd continue to go short. So now I'd have pulled it there. It's still open and to be open and ticking away. But, if I'd been following it and we'd seen this cross here, it may have closed there. That would have closed out the final 20%, to be honest. It would have closed out there because that's crossed. The root, the system would have closed out. So we would have closed our final 20% there. Even though this, it then has recrossed, but on this candle, I wouldn't have. I mean, you could have been really aggressive and re-entered again on that massive candle, which is what's showing. That's still showing, suggesting more sentiment, but a small risk given how well we've done to the downside. But 4767 is back as a target level, as Jim Short talked about. So we're back to the lows of the immediate. The positive retail sales data that came out. So nice trend following, mean reverting, pips in the bag. with our Bollinger Band system. I'm saying it's trend following. Let's just open a trend following strategy before we go. The MACD and SAR was probably chopped around as well. It's another good one, another one that chops around a lot. But there's the trigger to go short. There, they've got the cross. It might have actually waited. Yeah, it's there. That's gone short there. Stop loss up there, turning the market not as high as the parabolic SAR. Similar pattern. Move down, and that is still short. This one is still short because we haven't had a cross down. So there, so that would have would have got in. There's the cross on that one there. So that's the entry there. Stop loss would have been up here to start off with. Like we said, there's a stop loss up there. And if you really want to be super scary, you put the all the way at the parabolic SAR, and then I'll be using the parabolic SAR to scroll down. But there, that's entry. That's the stop loss. No target set because we're moving lower. You could have used the multiple of the ATR to create a target, but this is a trend following. So that's our entry. Stop loss now is rammed here, so it's only just guaranteed a profit. Obviously, the parabolic SAR's all the way up there still, so a big move. So potentially still moving down. And the good thing here on the MACD, our MACD and our signal lines continue to widen. We've gone from a cooling of the deep red on the histogram to pink to another deep red on this, just on this move here at the 2 o'clock candle. So I'll haven't waited a stop loss here now, but we're in the money on that one as well. But to say our trend, our mean reverting strategy, very much helping us out as well. And finally, let's have a look at good old crossing EMA. It's been chopped on the news, but again, short still. So again, there we go. See, there's our stop loss, turning the market. There's the trigger, the entry there. Stop loss up there, pulled it down now, and then down because we haven't closed. In fact, we did, didn't we? We closed back to the midline, the mid moving average. Remember, this is 21, 9, and 5. This is still moving lower. Big volume as well as we come into the open as well. So I'm just going to be riding that to the downside still as it's trending lower. And I mean, reverting we got caught, chopped out, but then the trend has moved lower. So see what's happening. But that is very much a move low in the last hour or so from this top here at 795 at 1 o'clock, and here we are an hour or so later, all the way down at 4767, and we've been as low. We've got lower again as we are speaking at 4761. So a big old move for gold. Jim Shot. I'm glad you caught yours earlier, but that remains short and moving lower. Okay, I will see you tomorrow. Tomorrow is, where are we? We're Wednesday. Tomorrow we're going to trade the US Open live tomorrow. So we'll be trading these sessions from about now at 2 o'clock my time, 1300 hours GMT. So come and join me and actually click some charts on, click some pips. Take care, my friends. I'll see you tomorrow for that. Stay safe. Listen to any more news coming from Washington and how we all play out. If this deal continues, is the ceasefire going to extend it? He says, Trump, that is, it's unlikely. Hence, the dollar picking up and gold weakening. His stocks might be rolling over. So we'll see how we open in 15 minutes. So take care, everyone. See you tomorrow. All the best. Bye-bye.